WestJet mechanics have issued a second strike notice that could start as early as Friday. The airline says they'll be taking action in the coming days to manage the impact of the possible strike, including steps to operate on a reduced schedule. The notice comes after the Aircraft Mechanics Association called off strike plans last week and returned to the negotiating table. Union members have voiced opposition to WestJet's request for arbitration. Shares of Alimentation and Couche-Tard are under pressure after adjusted profit missed expectations. The company saw lower fuel sales. The convenience store and gas station operator also reported merchandise and service sales that were lower than expected. Couche-Tard says the quarter has been challenging due to persistent inflation and continued pressure on consumers. And on the upside, the company is raising its dividend. It's also appointed Alex Miller as president and CEO effective in September. Check out shares of General Mills in the red after the packaged foods giant reported revenue for the latest quarter that missed expectations. Sales fell more than 6% compared to last year. General Mills also issued a profit outlook that was below expectations and says that it has to pivot in response to a more challenging operating environment. Well, let's take a look at the markets against that backdrop. We do have some green shoots out there. Campbell's Soup, another consumer-oriented company, is moving higher. So is FedEx, up 14.5% as its cost discipline helped its bottom line out in the quarter. And our next guest says if you're looking for how things might play out in the back half of the year, there's plenty of reasons to be optimistic. Let's bring in Ryan Detrick. He's Chief Market Strategist at Carson Group. Ryan, thanks so much for joining us, and I'm glad to have your sunny disposition because I think I've been glass half empty for a lot of the day. You know, I consider factors like breadth, troubling inflation in Canada, but also Australia, and generally these consumer-oriented stocks, even FedEx. I mean, its sales barely grew. All of this was due to cost cutting. Why are you optimistic?
Boy, how much time do we have? But no, thank you for having me. Glad to be back. I mean, it is what you said. Expectations are still low. I mean, like the S&P 500 has over 31, or has 31 all-time highs this year. Continued gains. The GDP, the first quarter U.S., a little weak, but you usually see that. I think it comes down to expectations. At the end of the day, people are still doubting this bull market. They're still doubting the overall global economy, specifically the economy in the U.S. We're still pretty optimistic. We can get into the weeds of this, but inflation is going to start coming back. We can get into breadth. We don't think breadth is as weak as people say. And if we get some better inflation data, we might start to see a good rotation into a lot of other areas. And, we had a good first half of the year. We think that second half of the year can be pretty, probably not as strong, but pretty good still.
Okay, so challenge me on this. The S&P finished higher yesterday, even though 75% of the issues were down, and everybody points to the equal weight versus the market weight as a sign that breadth is not great.
Yeah, you're right. Equal weight, if you look at it, though, it's just going to be kind of choppy, kind of sideways. We all are fully aware, like you said, NVIDIA and the large cap tech names have done very well. Look at year to date. There's 11 sectors in the S&P 500. 10 of them are higher. It's not like, not like the late 90s where truly only technology was going higher. And then you think about it, what's going to drive things, right? I mean, in the U.S., July, random stats, but July has been higher the last 9 years in a row. What in the world's happening in July? Earnings season. Every year we come in here and how there's going to be a recession, Then earnings come in, second quarter earnings usually better than expected, and you get an upward bias. One more, I think you've got this chart here, but we've got 31 all-time highs on the S&P 500. That's one of the most ever at the middle of the year, on pace, given we're at the middle of the year here, to be up over 60. I took a look. When you have at least 25 all-time highs, the rest of the year is up a median of almost 10%. Okay, that's like double the average median return the second half of the year. And one more, when you're up at least double digits at the middle of the year, the rest of the year, the median return's up over 9% higher, 83% of the time. Both those numbers way better than average returns. It's just one way to look at it, yes. But we continue to think that, we've been overweight equity since December of 22. There's been some fits and starts there. Don't get me wrong. We're still pretty optimistic those second half's going to be better than people think.
Okay, so my question is, how does that 10% return come about? Is it through multiple expansion because we're already pretty pricey, or is it through earnings growth? And if it is, are we nervous about that just because it seems like we're getting signs consumers waffling a little bit, software X AI also seems to be struggling?
Yeah, I mean, the consumer, at least specifically in the U.S., has shown some signs of pulling back a little bit, but we think it's more normalizing. If you look kind of beneath the surface there, what's going to drive? That's the big question, obviously. Why do we still think stocks are going to be pretty good the second half of the year? It might start on Friday here in the U.S., right? PCE, the inflation data is supposed to come out or will come out. We see under the surface, grocery prices have been down four months in a row. New car prices down 5 months in a row. There are some signs that inflation is really coming back pretty quickly. We're optimistic we're going to continue to see that. What does that mean? Well, it means the Fed probably can cut 2 times, probably in September, probably in November. We're not saying, when the Fed cuts, it leads to a recession. People think, oh, the Fed cuts and it's the end of the world. No, you can have a couple strategic cuts, surgical cuts, if you will, like in the mid 90s, like in 2019, other times where, we don't really need interest rates up over 5% here in the U.S. We've got inflation coming back. So that could be one spark. And then to answer your other question, yes, earnings. I know I sent a chart of S&P 500 forward earnings going out 12 months. I mean, it's up like 25%, okay, the past year and a half or so. Earnings expectations continue to improve. Earnings in general continue to do good. Like you said, FedEx, no recommendation on FedEx, but they said, hey, the economy looks pretty good. The future looks pretty good. And here's some cost cutting. So the ingenuity of corporate America continues to improve, and it never really left, I guess. And we think that that's a good reason to think earnings will still do pretty solid in this second half of the year.
Let's talk sectors. Are you letting those tech winners ride? Are you looking for opportunities that have been ignored because tech has really been stealing the limelight?
Yeah, I mean, tech's done amazing. We've been more neutral technology. We've been overweight communication services. But to answer your question, we think the baton's going to be passed around. And no, another chart I did send you, just look at earnings on the S&P 500. We know they've been strong in mainly the tech names, and that's what we're talking about here. But if you look at 2025 and 2026, I think people will be surprised to hear this. S&P 600, that's small caps, smaller names, are actually expected to have stronger earnings growth. And our base case remains, if the economy avoids a recession, the small caps and mid caps, which people have just totally thrown out and they don't want to touch them, could do well. Also on a relative basis, looking at multiples, keep this simple. Small caps are as cheap relative to large caps as they've been since 1999. That kicked off a 13-year period of outperformance of small caps relative to large. We're not saying that's going to blindly happen again, but small and mid caps are cheap. There's earnings growth coming. We just need that thing to spark it. We think it'll be better inflation data and a couple Fed cuts coming up. So yeah, we're looking at a broader market. We'd be careful just to go all overweight technology here because again, that's been the true leader. Yes, but we think other areas are going to do pretty well. Look at today again, FedEx and transport. Transports have done very weak this year, but hey, maybe that can get a bid with some rotation out of the high flyers into that with an economy that's pretty solid.
So I hear you that one of the catalysts is, inflation does cool, gives permission for a little bit easier monetary policy. And I know the U.S. has really been on its own journey when it comes to economic expansion and what's happening internationally doesn't necessarily apply. But I will bring up the fact that Canada's inflation unexpectedly picked up. When the data came out yesterday, Australia overnight, similar thing. Does that give you pause?
Yeah, you're right. And obviously, I know Bank of Canada's already cut, right? ECB's cut. We've had the Swiss bank cut twice. So we're starting to see some cuts. And it's, it's talking with Canada, the Wayne Gretzky quote, right? Skate to where the puck's going to be, not where the puck is. You can have some of these little blips, after inflation improves. In the U.S., the first quarter, we saw that big improvement last year in inflation. Blip, a little roller coaster ride up. But we continue to think the overall trajectory is going to be a little bit lower globally, but obviously, I'm focused more in the U.S., so specifically in the U.S. And again, is it bad to have inflation running at 3% when you've got really strong GDP growth? We'd say no. Maybe you got to pay the piper a little bit with a little bit higher inflation for stronger growth and stronger earnings and better productivity. We've got really strong productivity here in the U.S. as well.